All right, Andy, welcome. We're going to talk today about the new
The new,
IRS rules and regulations 2026 that's happening. Southwest has implemented
yep,
the changes. So we're going to talk about the Roth catch-up contribution. We're going to talk about potentially Roth as NEC or NEC being Roth instead of
yep,
pre-tax. We'll talk about the new ability to contribute, what is it, 80% of your income into the 401k, which is crazy, but
it
we'll
is
talk about
crazy.
when that might be effective or
Yes,
excuse me, helpful. But first, I just want to disclaim we're not part of SWAPA. We're not, representing them in any way. We're representing Leading Edge Financial Planning, and we're certainly not representing Southwest Airlines as well. But these are IRS rules and regulations. We want to get out to our pilot tribe and audience how and what and why these settings might be important to them and what they should do about it, right?
yep, perfect. Yeah,
Awesome.
and
What
of
do you
course,
got before we jump
yeah, I
in?
said none of this should be construed as individual,
There you go.
financial advice. If you got any questions, that's what we're here for. Give us a call, and
Yeah.
we'll walk through your personal situation.
Perfect. Yeah. If you want to contact us, I'll throw it out there right now. It's
Yeah,
Andrew at leadingedgeplanning.com, Charlie at leadingedgeplanning.com, and or you can call us at 865-240-2292. And so our website, Leading Edge, last plug, right? Leadingedgeplanning.com is our website. So check that out. Get in touch
excellent.
with us. But Andy, let's jump in.
Yeah,
First, maybe the groundwork, I think, for the new numbers that are happening in
yeah,
2026, limits, IRS buckets, all that kind of stuff. What do you got?
yeah, yeah. Let's just take a look at it real quick. So
Mhm.
2026 IRS 401k limits, the big one, and really the one you care the most about when we start talking about Roth catch-up
Mhm.
is this 24,500. That's the contribution limit for the pilot, not including the catch-up, sometimes referred to, or I would say formally referred to as the 402G limit under IRS lingo.
Mhm.
And that's important, right? Because you have to get 24,500 into the 401k in order to start making catch up. So in other words, if you get $24,499 and your contributions plus Southwest hit the 72,000, you'll be like the valve won't open. It'll stay
Yeah.
closed
Yeah.
for catch up. And maybe that's a little bit of a different thought process for some pilots who are just it's never been that way before. And
Yes.
then the last piece I'll add here from a limits is that catch-up amount. So those who are 50 and up, there's really two numbers now. If you're 50 and up, you get $8,000 as your catch-up, and then 11,250 if you're 60 to 63 during 2026. And
Hmm.
this is the other big one here. This is going to be Roth, right? So previous
Yes.
years, this was tax deferred or pre-tax. Now it's Roth, and that assumes you made 100 greater than 150,000
Hmm.
in 2025.
Yeah, absolutely. So we would assume that most of our clients, we're not sure,
That's
maybe if you're
right.
brand
Yeah,
new FO, maybe, and the pay rates are so good now, or maybe you don't
that's
fly that
right.
much, but most everybody is going to have to be Roth catch-up contributions. And that's really what we're going to talk about a lot today. But these
Yes.
numbers are awesome. Gosh, you're gonna get $80,000 in if you're a 50 and over, and even more than that. Well, I can't I try to do the math again in my head.
Yeah.
72,000 plus 11,250 if you're 60 to 63, which is phenomenal.
Yep. These are
Awesome.
big numbers for
That's
sure.
right. That's
Yeah.
really good. So now, I think you alluded to a little bit this 402G limit, 24,500, and then I'll go into my catch-up contribution of 8,000 or 11,250. Has to be Roth.
Yeah.
Um, what are let's talk about the mechanics. What does that look like? What do we do? I'm a Southwest, not anymore. I'm role playing here. I'm a
Yeah.
Southwest pilot. I'm 51, and that part is true. But anyway, what do I do January 2nd as far as this new rule is concerned?
Yeah. Yeah. So I think the most important thing for listeners and pilots to think about is you have to make a positive election in order to get catch-up contributions. In other words, on January 2nd, if you go to workplace.schwab.com, you log in on that website, you have to go in and say, this is how much I want to put for catch-up. Otherwise, it's going to default to zero and you won't get any catch up. So really important. We can show you what that's going to look like here
Yeah.
in just a little bit. And
Yeah.
then so that's the first thing. That's a January 2nd. You got to do that. And by the way, that this isn't like open enrollment. That doesn't close, right? You have all year to do it. Now, of course, you would want to do it before you get to that 24,500, but it's not like not a window or an election window. And then the other thing I think about is, well, what lever do I have to pull to manipulate this money going into the catch up? And that's your deferral percentage, right? So leading up to that, how much do I need to defer in order to make sure I get to 24,500 prior
Yeah.
to the 401k getting to 72,000, and then have some time to hit my catch up limits of 8,000 or 11,
Yeah.
250. So it gets complex. I know.
Yeah.
This is where I'll pause. I'll let Charlie clean up
Pilot
everything.
proof. I got to pilot
Yeah,
proof
yeah,
this
yeah,
stuff for a
yeah,
little
yeah.
bit.
Get after it, Charlie. Yeah.
So, but, basically, I'm a captain, and I'm making anywhere close to the 12-year limit. I'm flying 100 trips a month. I'm probably going to be close to 450,
Hmm.
400, 450, something like that. So if I'm at 10% plus, you can do the math just as quickly as I can. That's 40,000 of or more of contributions. Now, clearly, you cannot do 40,000. It's
Yeah.
32,500 is the maximum there, if I got that number right, for 50 and over. So clearly, the more money you're making, the lower your percentage can be. But SWAPA has put out some data that's, kind of, I think they leaned a little
Yeah.
on the low end and said, hey, you need like
Totally.
12, 13%. But that's a pretty low income, especially for a captain, low flying and low
Yes.
low trip totals.
Yeah. There's swap what they put out was 13% for age 50 and
Mhm.
up, so 8,000, 14 for the 11, 250. And
Mhm.
those numbers I think will generally work, but I think those are more like your FO who's in those
Mhm.
catch up limits. It's kind of where they need to get. To your point, a captain, it's probably 10%, right?
Yeah.
Right around there. But
Yeah.
unfortunately, we were racking our brains like, is there a good rule of thumb?
Yeah.
Divide by 2 times 5, right?
Yeah.
There just isn't. Yeah. Yeah. So
Yeah.
it's just kind of have to do the math
Yeah.
and make sure you hit those numbers.
Yeah. And I think people are used to that, it's like, hey, I want to get, and in fact, a lot of our people are like, I want to get it in as early as possible.
Yeah.
So those folks will be fine, Andy. They're going to get, because the key here, I think is what you said earlier, I'll just stress again, is you have to get the 24/5 first before any catch up will happen. And that's
Yep.
different, So here's where the gotchas might happen is if you're a sophisticated, you're thinking about this and you're like, hey, I'm only going to do 5, 6, 7% because I know Southwest is doing a ton.
Yep.
And then I can get up to my IRS limits. That's not the case anymore.
Yeah.
It is a race that you need to get to 24/5 and you need to get all that catch up in there. Southwest cannot do the catch up for you. Only you can do that. So go
That's right.
ahead.
Yep. Nope. You hit the nail on the head
Mhm.
there, Charlie. And then this is just a picture of what is it going to look like on um, the Schwab website. So you have to go in. This starts on January 2nd. You got to go in there and make that percentage. Probably look like what your deferral percentage is for the catch up portion. So you again, it's not a default into Roth catch up. It defaults into not Roth catch up, if that's the way to say that. And you've got to go make it happen. And
Yeah.
then just a plug is just look at what your allocations are. If you're not someone who's historically done Roth contributions, make sure you're taking a look at what that money is flowing into. Otherwise, if you don't have anything set, it's just going to go into a target date fund that kind of most closely
Mhm.
aligns with your expected retirement. So just something to keep in mind. Of course, if you're a client of Leading Edge, we'll likely have a PCRA account open and it'll flow into
Yeah.
that.
Absolutely. So one thing I wanted to stress too is if you're doing the math and you normally do, hey, I'm going to do 10% pre-tax, 10% Roth, and that works out for you, you might need to think a little bit about that too, because now if you do 10% pre-tax, 10% Roth, and you're going to get the Roth catch up, your numbers could be off a little bit there, right? Did I get
Yeah,
that right, Andy, as far as
that's
how to
right.
think about that? Okay.
Yep. Yeah,
Excellent.
because if you had a number in mind, then this changes those
Yeah.
numbers a little bit. Absolutely.
Again, got to do that fifth grade math there. You'll be good to go.
That's right.
But sometimes that's harder, easier said than done.
Tough
Um,
nonetheless.
one thing I'll stress is, can you hear that?
No.
Okay, good. All right, we'll cut that out then. But anyway, one thing I'll stress is that the taxes will come out as you're paid, 5th and 20th. Because now your taxes are going to go up, if you're doing Roth catch up. So the taxes will come out on the 5th and 20th, probably 150 bucks a month-ish, depending on your marginal bracket. You're not going to get surprised in April with a big monstrous tax bill because your Roth catch-up, excuse me, your catch-up is Roth.
Right.
And so that's one thing I wanted to stress there. But does that make sense? Did I say that clearly, Andy?
No, you nailed it. Yep,
All
that's
right.
exactly right. Yeah, it gets reflected in the withholdings you have set with your
Yeah.
W-4. Yeah.
Excellent. All right. Awesome. So anything else on that before we transition to the two components we talked about as far as being able to do NEC Roth and or the 80%? Anything else on that?
No, just the foot stomp. You got to go in. You've got to.
Yes.
There's a action item. There's a to-do
Right.
item. You've got to go in and knock out
Perfect. And there's time. You got some time to do it.
that time. Yeah.
It starts January 2nd. But anyway, the other thing, the second of the third things we want to cover is you can now tell Southwest Airlines to make your NEC Roth. And so, we'll talk and you can tell us like who might consider doing this, who might this be good
Yeah.
for. One of the things is I can tell you right off the bat, if you say, turn my NEC into Roth, your taxes are going to go up significantly. Now we
Yes.
love Roth as much as the next, person, but that's going to take some serious
Yeah.
thoughtfulness.
Yeah.
Mhm.
And I think, to your point, like who does this make sense for? I'd
Mhm.
say if you are already contemplating doing a Roth conversion in 2026, so
Right.
you set that up, you're going to do it in your 401k. This, the way I think about it, is just an automatic Roth conversion, right? You get the 18% of every paycheck to the extent that you're under the 72,415 limit is going to go in as will go in as Roth, and essentially will go in and get converted to Roth. So if you're already like, I'm going to do Roth conversions this year, well, then this is a perfect way to do that and get those numbers. Um, and I think some things we had talked about as well, Charlie, is there are other ways to do this first, right? You probably want to make sure that all of your contributions
Yeah.
are Roth before you do it, right? So the 402G, the 24/5, the catch up's going to be Roth to the extent that you're making catch up, doing backdoor Roth, and
Yeah.
then this is kind of like that fourth lever I get to pull if I
Right.
really want to do some Roth. But
Right.
really, it's just an in-service Roth conversion
Exactly.
is kind of the way I think about it.
Yeah, that's perfect. Well put. I mean, like if you're not doing 401k Roth contributions in the first place, forget about this.
Yeah.
This is, like you said, third or fourth down the line. A couple other things to consider before you get there. Very aggressive. We love the way you think if you're thinking about it, but it's going to be some extra taxes that you want to make sure pays off in the long run for your situation, for your personal situation.
Yeah.
So I think that's awesome to think about and review as well. But a good feature nonetheless. Anything else that we need to think about and tell our pilots about the NEC Roth? I think that's pretty straightforward.
Pretty straightforward, yeah.
Mhm.
And maybe if you're someone who's on loss of license, long-term disability, you
Yeah.
expect to be in that situation for the majority of 2026, then
Mhm.
this is another opportunity on the sick TFP or the vacation that
Yeah.
you're setting.
And you're saying that because you're in a lower tax bracket,
That's
possibly.
exactly right.
Okay,
Yes,
got it.
that's
Yeah,
exactly right. Yeah, because all
perfect.
that loss of license, assuming right, loss of license is tax-free, there's a lot at play here.
Yeah,
But if your loss of license is tax-free, if you're on long-term disability A or B, that's tax-free,
yeah,
then and those numbers are sufficient for you, then think about Roth as maybe more advantageous savings
yeah.
opportunity.
I love it. That's awesome. The last final thing that's new in the Southwest Airlines 401k, swap a 401k plan is that you can contribute up to 80% of your income, which is phenomenal. You're going to be broke the first couple months if you try to do this, and you'll be maxed out. But no, it's a good opportunity for a very specific subset of people. Otherwise, most people are like, oh my God, I got to have money to eat
Yeah.
on. So, but anyway, what do you think, Andy? Who does this apply to?
It's just that it's the super contributors. There are some
Uh,
people that's just the way they are. They want it on, the first paycheck in January. They want to fill the bucket up as much as possible. And then they save on the backside in order to accomplish that, right? So they put money away. They have, cash in their checking account to offset that, very low income. So that's an awesome opportunity if that's who you are. And then the other one, back to that, like, hey, you're on disability. You're probably dropping at least one sick TFP. That's always a good recommendation, and vacation pay that you've accrued. Um, maybe you want to defer up to 80% of that. So again, back to that Roth is NEC. There's just, that's an opportunity to save more money in a tax an advantaged way, maybe when you're on disability. You probably want to put it as Roth, but that would be
Yeah.
another opportunity. But again, for the most part, I don't see a lot of 80%
Yeah.
deferrals out there.
Yeah, absolutely. Yeah. Sneak preview. Maybe when the spill cash market-based cash balance plan comes along,
There you go.
maybe that's another player to help you get more money, spill cash there. But anyway, minor thing, and that's still a ways off. So I think those are all the big nuggets we wanted to share. Anything
Yeah.
else that our pilot group can benefit from there? I think we covered most of it.
Yeah, absolutely.
Sweet. All right. Well, thanks, Andy. Appreciate it. And please share the video if it's helpful. Give us some feedback, questions. There may be comments in the YouTube section. Like I said, you can email us, Andrew at leadingedgeplanning.com, Charlie at leadingedgeplanning.com. Email us with any questions, comments. If there's something in here that you think, hey, that's a mistake, let us know. We'll fix it. We'll get out the right information. We don't make mistakes often, Andy, but we do. It's not true. But anyway, thanks for listening today. Fly safe. Happy New Year. We'll talk to you soon.
Take care.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only. It does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from these projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.